Alright everyone, welcome back to the channel. It's Sonu here, and today we're diving deep into something that's on everyone's mind, whether they admit it or not, the future of your money. You work hard for it, you try to save it, maybe you're even trying to grow it. But let's be honest, the financial world can feel like a roller coaster designed by a madman, especially with all the noise out there. What if I told you the stock market is about to crash in 2025, or that Bitcoin could 10 times? These aren't just clickbait headlines. These are real possibilities that could dramatically impact your financial future, for better or for worse, depending on how prepared you are. Now, before you start panic selling your grandma's antique teacups or remortgaging your house to go all in on some obscure altcoin, let me be clear, I don't have a magic crystal ball, nobody does. But what I do have is a knack for spotting patterns, for sifting through the mountains of data, and for identifying the undercurrents that most people miss until it's too late. We're talking about significant shifts, the kind that can make or break fortunes. It's about understanding the mechanics behind the headlines and positioning yourself to not just survive, but actually thrive in the coming year. So if you're tired of feeling like you're always one step behind, or if you're looking for a clear, no-nonsense guide to what's really happening, then you're in the right place. Today, I'll break down the 3 biggest financial trends nobody is talking about, and how to profit from them. We're going to cut through the hype, look at the facts, and give you actionable insights. Make sure you stick around until the end, because the last trend we're covering is one that the big players definitely don't want you to know about. Let's get into it. Alright, let's kick things off with the big one, the stock market. For a lot of people, this is the definition of investing. You hear about it on the news, your uncle talks about it at Thanksgiving, and it seems like everyone has an opinion on whether it's going up, down, or sideways. But what exactly is it? Simply put, the stock market is a collection of exchanges where shares of publicly traded companies are bought and sold. When you buy a stock, you're essentially buying a tiny piece of that company, becoming a part owner. If the company does well, its value can increase, and so can the value of your shares. If it doesn't, well, your shares can lose value. It's a dynamic, ever-changing environment influenced by everything from global politics to a CEO's bad tweet. Think about a company like Apple. Chances are you're watching this on an Apple device, or you know someone who owns an iPhone, an iPad, or a Mac. When Apple releases a new product that everyone loves, or when they report amazing profits, investors get excited. This increased demand can drive the price of Apple's stock, ticker symbol AAPL, higher. Conversely, if they have a product flop or face a major lawsuit, the stock price might take a hit. Another classic example is Tesla. Love him or hate him, Elon Musk's announcements and the company's innovations in electric vehicles and battery technology have sent its stock on a wild ride over the years, creating millionaires and sometimes causing a bit of heartburn for investors who bought at the peak. Now, for 2025, the whispers are getting louder. Some analysts are predicting a major correction, citing things like inflation, interest rate hikes, and geopolitical instability. Others see continued growth, especially in specific sectors like AI or renewable energy. The truth is, volatility is likely to be the name of the game. This doesn't mean you should run for the hills, it means you need to be smarter, more selective, and have a long-term perspective. Understanding the fundamentals of the companies you invest in, diversifying your portfolio, and not panic selling during downturns are key. We're talking about identifying solid companies with strong balance sheets and growth potential, rather than just chasing meme stocks. Next up, let's talk about a market that absolutely dwarfs the stock market in terms of daily trading volume, yet most everyday investors barely know it exists. I'm talking about the foreign exchange market, or Forex, or just FX for short. Get this, it's like a $7.5 trillion global currency exchange. That's trillion with a T, happening every single day. To put that in perspective, the New York Stock Exchange, one of the largest stock markets in the world, trades around $200 billion per day. Forex is literally an ocean of money, constantly flowing as currencies are exchanged around the clock 5 days a week. It's the backbone of international trade and global finance. So, what exactly is Forex trading? At its core, it's the act of buying one currency while simultaneously selling another. You're essentially betting on the relative strength of one currency against another. For example, if you believe the euro, EUR, is going to strengthen against the US dollar, USD, you would buy the EUR-USD pair. If the euro does indeed rise in value compared to the dollar, you make a profit. If it falls, you incur a loss. It sounds simple, but the factors influencing currency movements are incredibly complex. We're talking interest rates set by central banks, inflation figures, political stability, economic growth reports, and even natural disasters. It's a massive, interconnected web of information. Now, why should you care about Forex in 2025? Because with increased global uncertainty and diverging economic policies between major countries, we're likely to see significant currency fluctuations. This volatility, while risky, also creates opportunities for savvy traders. For instance, if one country's central bank is aggressively raising interest rates to combat inflation, while another is keeping rates low to stimulate growth, their respective currencies could move in opposite directions quite dramatically. Understanding these macroeconomic trends will be crucial. It's not for the faint of heart, and it requires a lot of education and risk management. But ignoring a market of this magnitude, especially in a potentially turbulent 2025, might mean missing out on understanding key global economic shifts. Alright, let's dive into the market that everyone loves to talk about, debate, and sometimes get completely confused by: cryptocurrency. Bitcoin, Ethereum, Dogecoin, you've heard the names. The crypto market is infamous for its incredible volatility. Prices can skyrocket, making some people rich overnight, and then plummet just as quickly, leading to significant losses. It's the digital Wild West, full of opportunity but also fraught with peril. Unlike traditional currencies backed by governments, most cryptocurrencies are decentralized, meaning they aren't controlled by a single entity like a central bank. This is both their biggest appeal and, for some, their biggest risk. The opportunity in crypto is undeniable. We've seen Bitcoin go from being virtually worthless to tens of thousands of dollars per coin. We've seen new projects emerge with innovative technologies aiming to revolutionize everything from finance, DeFi or decentralized finance, to art and collectibles, NFTs or non-fungible tokens. The potential for massive returns is what draws so many people in. Imagine getting in early on the next big thing. That's the dream, right? But for every success story, there are countless tales of people who lost their shirts chasing quick profits, investing in scam coins, or simply buying at the top of a hype cycle, only to see their investments evaporate. It's a market driven by sentiment, technological breakthroughs, regulatory news, and sometimes, pure speculation. Looking ahead to 2025, the crypto landscape is likely to remain as dynamic as ever. We're seeing increasing institutional adoption, with big financial players starting to dip their toes in. Regulatory frameworks are slowly but surely being developed around the world, which could bring more stability, but also potentially stifle some of the Wild West innovation. Key things to watch will be developments in scalability for major blockchains like Ethereum, the rise of new narratives, like AI-related crypto projects or real-world asset tokenization, and of course the ever-present macroeconomic factors that impact all risk assets. If you're considering crypto, education is paramount. Understand the technology, the specific project you're investing in, the risks involved, and never ever invest more than you can afford to lose. Now, after the adrenaline rush of stocks and crypto, let's shift gears to something that might sound a bit, well, boring to some people: bonds. But trust me on this, overlooking bonds, especially in the current economic climate, could be a big mistake. So what are bonds? Think of it this way: bonds are like loans. You're the bank, and the government or a corporation is the borrower. When you buy a bond, you're essentially lending money to an entity for a specific period. In return, they promise to pay you regular interest payments, called coupon payments, over the life of the bond, and then return your original investment, the principal, when the bond matures, or reaches its end date. It might not sound as exciting as a stock that could double in a month, but bonds play a crucial role in a diversified investment portfolio, primarily because they are generally considered less risky than stocks. When stock markets are volatile or declining, bonds often hold their value better, or can even increase in value, acting as a stabilizing force. Government bonds in particular, like U.S. Treasury bonds, are often seen as one of the safest investments you can make because they're backed by the full faith and credit of the government. Corporate bonds issued by companies offer higher interest rates to compensate for slightly higher risk compared to government bonds. The key is, you know exactly what interest you're going to receive and when you'll get your principal back, assuming the issuer doesn't default. So, why are bonds particularly relevant for 2025? With interest rates having risen significantly over the past couple of years to combat inflation, the yields, the return you get, on newly issued bonds, are much more attractive than they've been in a long time. This means you can get a decent, relatively safe return on your money. If inflation starts to come down and central banks eventually begin to lower interest rates again, existing bonds with higher coupon rates could even increase in price. Bonds can provide a steady income stream and capital preservation, which are incredibly valuable, especially if you're nearing retirement or if you're expecting a more turbulent economic period ahead. Don't sleep on bonds. They're the unsung heroes of many successful investment strategies. Alright, for our final trend, we're diving into the somewhat mysterious world of hedge funds. These are the investment vehicles often associated with the ultra-wealthy, sophisticated strategies, and let's be honest, pretty hefty fees. Hedge funds are private investment partnerships that use a wide variety of complex strategies to try and generate high returns for their investors, often aiming to make money whether the market is going up or down. They might invest in stocks, bonds, currencies, commodities, derivatives, pretty much anything. They're hedged because they often try to protect against losses, but they also take on significant risks in pursuit of outsized profits. Now you might be thinking, Sonu, that sounds great, but I don't have millions to invest in a hedge fund, and those 2 and 20 fees, 2% management fee and 20% of profits, are insane. And you'd be absolutely right. For most individual investors, directly investing in a traditional hedge fund is out of reach, or just doesn't make financial sense because of the high minimum investments and costs. They're designed for institutional investors and very high net worth individuals. The managers are often seen as Wall Street wizards, employing strategies that seem incredibly complicated and opaque to the average person. This exclusivity and complexity is part of their allure and, frankly, part of how they justify those fees. But here's the secret hedge funds don't want you to know. Many of the underlying principles and even some of the strategies they use can be understood and, to some extent, replicated by individual investors without paying those exorbitant fees. For example, a common hedge fund strategy is long or short equity, where they buy stocks they think will go up and sell short stocks they think will go down. While short selling is risky and not for beginners, understanding market sentiment and company fundamentals to make informed buy decisions is something anyone can learn. Furthermore, with the rise of ETFs, exchange-traded funds, there are now products that aim to mimic certain hedge fund strategies or provide access to alternative asset classes at a much lower cost. The key is education and understanding that you don't always need to pay a fortune for sophisticated investment approaches if you're willing to do your homework. Alright, so there you have it. A deep dive into some of the major financial currents shaping up for 2025, the ever-present stock market volatility, the colossal forex market, the wild ride of crypto, the often underestimated power of bonds, and a little peek behind the curtain of hedge funds. It's a lot to take in, I know, but understanding these trends is the first step to making smarter financial decisions and not just reacting to whatever the headlines are screaming at you on any given day. The goal here isn't to predict the future with perfect accuracy because nobody can do that. The goal is to be prepared, to be informed, and to have a strategy. Now I want to hear from you. Comment below. Which market do you think will boom in 2025? The stock market, forex, crypto, bonds, or something else entirely? There are no wrong answers, and I'm genuinely curious to see what everyone is thinking and what you're focusing on for your own financial journey. Every single one of us has a unique perspective, and sharing those insights can help us all learn and grow together. Remember, this community is all about helping each other navigate the often confusing world of money. If you learned something valuable today, if this breakdown gave you a new perspective or a bit more clarity, please do me a huge favor and smash that like button. It really helps the channel out more than you know. And of course, subscribe if you haven't already for more content just like this. What's your #1 investing struggle? Let me know below. Seriously, tell me what you're finding challenging, and I'll do my best to address it in future videos. And one more thing, next week, I'll reveal how I turned $1,000 into $50,000 with crypto. Hit notify so you don't miss it. Thanks so much for watching, and I'll see you in the next video.